Hi, it's nice to meet you all, and it's my privilege to speak to everyone at this remarkable GPU technology conference. I am Hyung-Sik from Qraft Technologies, an artificial intelligence solution provider based in Seoul, South Korea, which is now in the process of setting up a new office in Toronto, Canada. I founded this company about 2 years ago, and I am here today to share our story of how we have been innovating and will continue to innovate the financial investment industry with AI technologies. I should admit that the presentation title, The New Era of Investment, is somewhat bombastic, but hope some of you may find our story interesting. So let's get started. Since not long ago, many portfolio managers have been making investment decisions based on quant models. Quant models have been a good supplement to the qualitative analysis of human portfolio managers. However, the one major drawback for most quant models have is their effectiveness is drastically decreasing over time. Many quant funds duplicate new strategies, but often find exactly the same strategies in the market. They put tremendous amounts of money and endeavors to come up with new strategies that might be already obsolete. This is a reason why many quant models do not work as expected. One way to solve this problem could be to make a new quant model for each and every day. So, if I'm asked what an AI investment solution is, I would like to answer that it is to make a every day a new quant model with most recent data points through deep learning. Building up a new quant model every day through deep learning requires tremendous amount of parallel computing powers, and therefore the performance of an AI investment solution can be differentiated by which GPUs are used. Another problem an AI investment solution has is usually the size of financial time series data is very limited compared to that of the data in other areas. Financial time series data used for an AI investment solution usually holds 2,500 rows for a 10-year period, and this is not sufficient to learn patterns through a general supervised learning. So we developed our own proprietary generative adversarial network system with which an AI investment solution could learn from a small amount of data based on multiple factor perspectives to maximize its learning capability. If I share more details about our GAN system with you, it basically consists of three components of first, the historical best portfolio calculation module. It calculates the historical best portfolio with all price data. Second, the portfolio generator, which produces mock portfolios with input data. And third, the discriminator, which measures the performance of portfolios generated by the portfolio generator against that of historical best portfolios. Here, the portfolio generator first learns to generate unpredicted portfolio with predetermined input data from a certain factor perspective, so that the discriminator cannot distinguish it from a historical best portfolio. So there is an individual factor portfolio generator for each factor, and each respective generator learns to have a maximum prediction power for each factor. As you already know, factor means components that explain the performance of an asset. For example, performance of an equity can be decomposed to momentum factor, size factor, value factor, dividend premium factor, and so on. Then the generator creates a final portfolio by using a pool of already calculated portfolios by factor as input data. Another higher level GAN structure calculates the optimal allocation weights for each factor portfolio. The system learns new data each and every day, and this is similar to learning with amplified data by using a priori knowledge about the factors. Compared to supervised learning or deep reinforcement learning, the dual process of generating optimal portfolio by factor with GAN algorithm and a final optimal portfolio using another higher level GAN system requires an enormous amount of working hours. However, the engine must learn new data within 24 hours in order to apply fresher model to the actual portfolio before next day market opening. So we solve this problem by employing a high-performance GPU. Here, each green bar represents the number of mini batches per second when operating our GAN system. As you can see from the chart, the performance of GPU is overwhelming, especially for high-end GPUs. The development of an AI investment solution starts with discussing a product scheme such as an investment universe, the number of holdings, a rebalancing period, risk parameters, and so on. Then we simulate the performance of a discussed product scheme, assuming a certain level of learning ratio, and check its marketability compared to the potential competing products. If any changes are required, we repeat the product scheme discussion until a final product scheme is confirmed. The next step is to discuss input data which AI investment solution will have to learn. At the moment, AI cannot estimate causal relationships or reasoning between input data and portfolio, but calculate correlations by data only. Therefore, this gap should be filled up by cooperation with human data scientists and financial experts. Lastly, the development of an AI investment engine is a process of validating discussed input data. Once a final set of input data is confirmed, the first stage of the development of an AI investment solution is completed. Now, let me offer you a live example of how an AI investment solution works. Last November, we launched our first AI ETF in Canada in cooperation with Mirasat Global Investments and Horizons ETFs. This AI ETF invests in a pool of regional and country equity indices under some specific conditions, and here each line represents the AI allocated weight for each region or country for the month. For your easy read, I have summarized the historical asset allocation of the AI ETF at the regional geographical level. Here, cash constitutes a risk-free region. One thing notable from this table is the deviation of the asset allocation even at the regional level is somewhat significant. Different from a human portfolio manager, an AI investment engine is not restricted by previous decisions or prejudice. As long as it determines that future performance could be better, it does not hesitate to drastically change its asset allocation. Our first AI ETF is listed on the Toronto Stock Exchange and its trading ticker is MIND. As its base currency is the Canadian dollar and the currency hedging function was added from January as per the request from the ETF sponsor, it is hard to say what the exact benchmark of MIND is. However, even in terms of absolute return and volatility, I believe it shows a steady and reliable performance in the real market. This line chart represents the one-year trading return of the Nasdaq 100 index from January 2014 to January 2018. Except for some months in 2016, the Nasdaq 100 index has always provided an attractive positive return to investors that invested in the index for 1 year. Now, we are working with Mirasat Global Investments and Horizons ETFs to launch another AI ETF in the US that could outperform the representative technology index. Here, the bold blue line represents the simulated one-year trading return of the new AI ETF we are now developing and planning to launch by the end of the first half of this year. If I share some key constraints of the new AI ETF with you, it will invest in so-called global fourth industry companies filtered by machine learning-based clustering method and preset market cap and trading volume parameters. The maximum number of holdings is set at 100, but in the simulation, the new AI ETF invested in around 70 to 80 stocks on average. To secure downside protection, we usually prefer to include cash in an investment universe, and the new AI ETF can hold up to 30% in cash. Lastly, we will control the turnover ratio of the new AI ETF to around 100 to 150% per annum, assuming conservative trading expenses. Now, more than $500 million assets in total are run by the AI investment solutions we develop and manage. Currently, most of the assets are coming from South Korea, but we expect to gain more assets from North America with further ETF launches in New York and Toronto. We currently run and are engaged to run South Korea's largest robo-advisor services through multiple commercial banks. This provides asset managers with the systematic access to Korean capital and enables us to win AI investment product launching opportunities more easily for a mutually beneficial relationship. In other words, we can give our potential clients access to Korean capital of our robo-advisor service, and our client can give us opportunities of launching a new AI ETF or AI mutual fund together. To add another point to this presentation in terms of input data, such as the Googling frequency of the word of GPU that can provide a better sense of causal relationship between two events. This scatter chart is the simple analysis of how much well the GPU Googling frequency could statistically forecast and explain the future performance of the S&P 500 index. In the analysis, the t-value and p-value of the GPU search frequency are 3.29 and 0.001 respectively over the last 5 years. So we can say that using the GPU Googling frequency as input data could contribute to improving the performance of an AI investment solution that invests in the S&P 500 index. Now we're trying to find more featured data sets that could contribute to our AI investment solutions, and we'll deploy them for our new AI ETF launched in the US soon. I'm not sure if I have enough time remaining, but if I could add just one more point to today's presentation, I would like to give you a quick introduction to our AI trade execution engine. In short, our AI trade execution engine is designed to optimize the balance between a short-term return, long-term, and minimizing cost problem as a result of slicing orders through deep reinforcement learning. For this, the execution engine defines the current state as a combination of already executed volumes and time remaining to deadline, and it responds to market data change with the features such as bid-ask spread and volume imbalance. This also requires the use of high performance of GPU. Due to compliance issues, currently the AI trade execution engine is not used for our AI investment solutions. Instead, we provide this to trading desks and dealing rooms of banks and brokerage firms separately. However, in the near future, I hope it could be integrated into an AI investment solution and contribute to improving its performance. That was the end of my presentation today, and thank you for listening to me. If you have any questions, you can visit our website or directly contact me. I'll be around here for the rest of the day's event, and thank you again for your attention. I hope you were able to find it interesting. Thank you again.